We're diving into a topic that's certainly top of mind for millions of Americans, student loans. Last October, after a 3-year pause, borrowers saw those payments resume, and the financial impact has been significant. A recent survey from the National Endowment for Financial Education sheds some light on just how people are coping and adjusting their budgets to manage these payments. And here to give us some more insight into what the findings are and what they mean for the future of student loans, we're joined by Dr. Billy Hensley, President and CEO of the National Endowment for Financial Education. Dr. Hensley, thank you for joining us.
Sure, I'm happy to be here.
So, Dr. Hensley, what does this new survey reveal about how resuming student loan payments has impacted borrowers' financial lives?
So last October, when the repayment pause ended, we explored what borrowers believed or expected would be the impact on their finances. So we're a year in, and we do know more about the reality of how borrowers are managing those loans. But it's important to note this is not a small number of people. 26% of the population currently have outstanding loans themselves or someone close to them, such as a child, grandchild, or parent has a student loan. And there's some positive, bit encouraging news here, and then there's some discouraging and concerning news. The positive being that the majority of people are reporting that they're doing okay, at least for right now. We need to keep in mind, though, that nearly 1 in 5 borrowers may not have had to make payments yet, depending on the kind of program they're in. But sadly, 27% say the end of the pause has negatively impacted their lives, which is lower than the 49% who were saying this last fall. So that is an encouraging bit of news. It's not been quite the hit that people were expecting. Now, on to the concerning news. The monthly budgets have been strained fairly significantly, with 3 in 4 having to make cuts, 28% cutting up to $500 a month, and then another 21% cutting something between $500 and $1,000 a month out of their budget. And for recent college grads and those sort of in the first decade of work, this is a pretty significant cut to most any budget, and in particular those who are new to their career.
So from this data, how do you find borrowers have kept up with their payments since the end of the repayment pause last year?
There is a bit of a silver lining here, in that most borrowers have kept up with the payments since the end of the pause. 56% have made at least a few payments, and 46% have made most or all payments. So that part is encouraging. But some may not be making payments regularly because of the programs they're in, maybe income-driven repayment plan where the payment is set to 0, or some borrowers may be in forbearance.
So does this data show how borrowers feel about their higher education, and if fewer borrowers are seeking further education?
Well, 2/3 are actually satisfied with the education they've received, which is great. But nearly 1 in 3 are saying they are less likely to pursue that additional education. When we asked this question last fall, 47% were saying at that point that they were less likely to pursue additional education. So that has balanced out just a bit. But truly what it comes down to is how much you owe, simply meaning the higher the balance is, the less likely you are to continue that education. But this is still, there's still true value in this 4-year degree. The Social Security Administration reports that people with a 4-year degree will earn a median somewhere between $630,000 and $900,000 a year more over the course of their lifetime. So, frame this from the point of the return on the investment, the cost of the degree versus the earning potential over time.
So we've heard a lot about student loans in terms of forgiveness programs and opportunities to lower payments. Do you expect that student loans are going to be an important topic for voters this November?
It is truly a key political issue, this election. 64% of borrowers say the topic of student loans should be a major platform consideration for both candidates. And we're talking about tens of millions of people here, potential voters. And what's fascinating is that in no age or political demographic does that opinion fall under 50%. It's as high as 80% for those under 25 and 70% for those 25 to 34. And this holds regardless of political affiliation. No matter what side of the aisle you're on, borrowers want policymakers to engage and focus on doing something about this. No matter what the solution is, they want positive change.
Well, for many, college is certainly an expensive prospect. What can borrowers do to lessen their borrowing burdens, particularly as they launch their professional lives after college?
Sure. Higher education is expensive. The average annual cost is over $28,000 a year now. And if you've not started higher education or you're thinking about going back to school, uh, make sure you have access or try to find quality financial education if your school has it or if it's something happening in your community, because research shows that when people participate in financial education, they actually make better borrowing decisions. They borrow less student loans for college. They are 21% less likely to have credit card debt. They're less likely to have private loans. And so do that. Educate yourself about that. And be sure to utilize the free application for federal student aid. A lot of people won't complete that because they think their income is too high or it's too complicated or they just don't know about it. On the other side, if you're already in repayment or about to jump into repayment, there's a couple of things I would encourage all borrowers to look at. Make sure you are aware of all the terms of any of the any repayment plan that you are enrolled in. Look at other options too that may be good for you. Consolidation, for example, may be an option for you. Just make sure you are not enrolling in a private loan product because a lot of those are not do not qualify for any kind of relief program. And 50% of borrowers say that communication from the loan services are good or excellent. So use that as an on-ramp to advocate for yourself, to ask questions, to make sure you're in the right repayment program. And lastly, I'll say this topic is very front and center for the news, for us all, really. So that means there's a lot of scams out there. Make sure you're protecting your information, that you're directly seeking resources from the student loan servicer or studentaid.gov, and that you are being very cautious about anything that charges a fee. Just stay away from that. Anything that's too good to be true is.
This is very insightful information. Where can we go to learn more about this data?
Well, for more information about these data, please go to nefe.org. That's our website where we publish the findings of this. And more information about student loans in general, go to studentaid.gov.
All right, Dr. Hensley, thanks for joining us today.
Thank you.